Okay, I don't normally use the 30 second, but 30 seconds pretty good for seeing these little momentum shifts right here. These bullish candles came in here. I got in on the pop, and I'm just kind of holding. We're consolidating right now. My big worry would be 2 or 3 bearish candles. That would be time to probably get out, but right now we're just consolidating. If we go to the 5-minute chart, it's been pretty choppy just because of the news that came out recently. And as a result, we're just balanced. We're just in this choppy, down balanced thing. So it's not very clean. This action is not very clean. But we'll keep holding this trade for now. See what happens. I think the 30 chart's fun to look at when you're trading this like live here. You get to just watch momentum build and not build. Right now it's just consolidating. We got these orange candles, which implies momentum is not present in this time frame. If I want to see what momentum is doing, I'd have to zoom into like a 5-second chart. And yeah, in a 5-second chart, I could see all this balanced momentum. A little bit of green, a little bit of a pop here, a little bit of a decline, and it's just cycling between these states of a little bit of a dip, a little bit of a rip, and it just repeats. And it'll keep doing this because it's essentially the market is just trying to trap as many people as it can. Each of these little pops here is not the indicator being wrong. It's literally what's happening in the market. All these pops are what is driving the market right now. This is momentum. This is what happened. We were going up and then we stopped going up. We were going down, we stopped going down. And it's just these repeated patterns here. We're on the 5-second chart, so it's a really tiny chart. We're just looking at the pure chop. So right now on the 5-minute, this is just a full balanced area, and same with the 30-second chart. It's just a balanced zone here. So we can see all those little bubbles. So there's no really reason to get out because the market's just trying to trap somebody. Right, so there could be a massive wick on one of these ends before it does anything, and if we get lucky, it'll rip above 170, and then we can maybe get a push to the 180s, or it'll spike down on my entry, and then I can consider getting out. Yeah, and then like look at this. The 5-second chart is insane on these little micro moves here. So look at that. Look at that little pop. Jeez, it's a massive pop. Went from little to massive. So the only reason I'm currently staying in this trade is because I'm anticipating that this is a trap of some sort. Even though the market is bearish right now, which is not ideal, but on a higher time frame like the 5-minute, we're just in a balanced, we're trying to find a direction. So these little pops here are causing that issue. Now it's starting to hold underneath this zone. So the bullish thesis I had is starting to decline. The safe play is to place our stops here at the bottom of this wick. And then, yeah, look at this. Let's look at this at a little bit closer detail here. Look at what's actually happening. Bears took control. They flushed 9 points underneath the consolidation zone. And then they failed to push it lower and just flatlined. They attempted it again, failed. And now we're back in the middle of the consolidation range. And I don't normally stay in the 5 second, it's too chaotic. There's a lot going on, but I like to zoom in to show like the real momentum that's happening here. If we turn off the indicator, it's a little bit more challenging to see what's going on, just because we don't have those balanced candles to show there's a flip that's happening. We just don't see that. But with the indicator on, we get to see these balance zones, which is directly related with momentum. Okay, we'll be staying on the 5 minute, 30 second more, less on the 5 second. I got my stops there, so this is a new feature I added with the indicator here. I haven't released this out to public yet, but it's essentially a state change responsiveness. It's basically telling you in order for this balanced zone to get invalidated, it needs some sort of delta of 0.63 ATR to essentially shift on average to some other buys. So these balance candles could be 40 points plus or minus before we even get a shift. And I mean, look at this candle here. This candle is massive. 80 points. So, but this is just the average. We're kind of in an on-averaged area because of the news. And we might get stopped out here, and we're probably just going to get stopped out. Let's go back to the 30 second and look at this. Now we can start to see a little bit of a clear picture, at least at the moment. We got bulls that took control. They kind of held it for a little while, and then they continued to take control. So I do not want to be in a long anymore. Not until bulls gain control. And I also don't want to be shorting this just yet, because we're kind of in the middle of this consolidation zone here. This larger consolidation zone. So I could short here. The indicator is saying that it's fine to do so. We have momentum is on our side. Okay, I'm going to take a short here. We're going to go 8 contracts. Let's put my first target at the bottom of this range. Second target a little bit lower. Leave the other 2 for now. So why did I get short? Well, we have bearish candles here, so these candles are not predicting anything. They're literally telling you what momentum is. Think of these candles as looking at a speedometer. I know that we're slowing down, so its probability is likely to keep slowing down unless we get, at least on the 30-second, some sort of delta of 9 to invalidate our dump. And now something interesting could happen. We could just bounce off this zone and go back up. So I'll go right to like break even here in case that does happen.